In March, an Israeli journalist reported on a missile strike near Jerusalem. Almost immediately, his inbox filled with harassment from anonymous online accounts. These anonymous users were protecting a $14 million investment. They pressured the journalist to alter his reporting because a specific description of the explosion, whether it was a direct hit or an interception, would determine if their wagers paid out. This is the daily reality of prediction markets, driven by massive, loosely regulated platforms like Polymarket and Kalshi. This chart tracks the monthly trading volume of prediction markets. Between 2024 and 2025, the industry saw a massive spike, with leading platforms processing over $13.5 billion in wagers. But looking at this map of Europe, a different story emerges. France, Germany, Italy, Romania, Portugal, and Hungary have rapidly rolled out bans on these platforms. We're watching a transatlantic legal battle over the definition of global crises, with billions hanging in the balance. To avoid being shut down in the US, prediction markets claim they are neutral financial exchanges. They argue they are merely providing a venue for traders, rather than acting as a sportsbook taking the other side of a customer's bet. They fall under the Commodity Futures Trading Commission, or CFTC. Over several decades, a process known as regulatory drift slowly expanded the CFTC's scope to include more abstract types of trades. Because events like elections or interest rate hikes carry measurable economic consequences, these platforms successfully classified their wagers as event contracts. This legal classification frames the activity as trading futures, just like the traditional stock market, using technical mechanics to distance the platforms from the label of gambling. This framework has attracted significant political backing. The industry now lists high-profile advisors like Donald Trump Jr., signaling its arrival as a mainstream fixture in American finance. By relying on this semantic distinction, platforms that operate like betting sites have found a way to function legally under the protective guise of Wall Street. Transition to the European Union, where regulators reject the American legal definition at its core. In jurisdictions like Portugal and Hungary, wagering money on the binary outcome of a political or sporting event is considered unlicensed gambling. In the eyes of these regulators, there is no financial loophole. The divide creates strange commercial tensions. Polymarket recently signed a massive, multi-year sponsorship deal with La Liga, the premier Spanish football league. But because of strict EU laws, the platform's betting features are strictly locked to North American audiences. Despite the partnership being with a European league, Europeans themselves cannot legally participate. European nations prioritize rigid consumer protection and anti-gambling laws over the unregulated growth of new financial technology. The complex financial instrument defense used to shield these platforms in America disintegrates the moment it hits a European regulatory border. Proponents argue the accuracy of these markets justify their existence. They believe the wisdom of crowds creates a predictive tool more precise than any individual expert. During the 2024 U.S. presidential election, prediction markets consistently outperformed traditional pollsters and media experts in calling the final result. However, this accuracy is shadowed by a severe lack of oversight. Anonymous accounts create a breeding ground for insider trading and manipulation that would be illegal on any traditional stock exchange. In early 2025, a mysterious user won $400,000 by betting on the ousting of Venezuelan President Nicolás Maduro. The bet was placed just hours before U.S. forces intervened, strongly suggesting the user had advance information. The financial structure also rewards bad behavior. Users are incentivized to spread misinformation or harass journalists to artificially sway the odds and protect their wagers. While Europe builds regulatory walls, the U.S. is embedding these markets into the digital landscape. Google now displays Kalshi's odds in search results, and news outlets like CNN have begun using prediction data to anchor their reporting. As billions of dollars flow through these exchanges, the platforms have evolved from observing world events to actively influencing how audiences perceive and react to them. The question remains, are these platforms the ultimate unbiased oracle for our future, or a dangerous global casino gamifying tragedy? And which continent's approach will ultimately be proven right?